mama said there'll be days like this. There'll be days like this. My mama said, mama said, mama said, mama said there'll be days like this. Hey, what's going on? It's 7:30 on a Sunday night. Hey, if you're here in Chicago, it is at least. And my God, I left my fan on. Fast Eddie and Jim, can you hear this fan that I got going by me? If it's annoying, I will just shut the dang thing off. But hey, it's early. I said I was going to start early, and true to my word, true to form, with a Starbucks cup full of water in hand, I welcome you to our weekly gathering once again, where we're going to talk investing, have a few laughs. I'm going to flub some things up. I usually do. It's just the way it goes around here, because I am like you, and I welcome you to this probably 90 minutes that we're going to hang out together. Look at stocks you want, throw something at me, tell me where you're from, tell me and everybody watching live and on the replay. By the way, for those of you watching live, very special treat. This is going to be commercial free unless I goofed something up. So I'm taking a playbook out of Mr. Kevin Burgess's playbook. I'm taking a play out of Kevin Burgess's playbook. I'm not taking his playbook out of his playbook. That doesn't make any sense. Well, if you can't hear this fan, it's literally like right there. That would be awesome, because for some reason I tend to get a little bit warm here. So look at this spread already. We got in the house Jim, Fast Eddie, Ivan Smith, Shamir all the way from Ottawa, Canada. Yeah, I heard, did Starbucks get a new drink or something drop? There was, I don't know, I heard something, there was some kind of news about Starbucks, early release of the pumpkin spice or something like that. Logan Leverett, what is going on, my man? All the way from Alabama, not Greenbow, are you? I love that movie. Sorry, Forrest Gump has a special place in my heart. I saw it with my grandmother. She's been gone a lot of years. She was like a second mother to me, and I took her to see Forrest Gump. So, yeah, has a bit of a special place. We got Dan the Dividend, dude. I hope you don't mind that I called you Dan. I know some of you incognito guys, hey, it's your thing. Is it right? Is it wrong? It's not for me to say, but it is for me to say that I'm here using my government name. And, Prez, yeah, it's funny, you and, here comes the age, here it comes, right? So, the queen, my queen of stream, oh goodness. Lisa J, or is it not Lisa J? Lisa Stocks. I'm sorry, man. There's a lot going on up here, right? The files are getting crowded. If you look at your phone, it's like, hey, you're running out of space. That's how my brain feels like. It's running out of space. We got to purge some things like we were doing today in our garage, purging some things we've been accumulating. Kind of like portfolios can just, portfolios. You get too much stuff. A little bit of cleaning, it feels better. You can focus a little bit better. Yeah, Lisa J stock. So, Ivan, what's up, man? What is my time horizon to start living off dividends? Interesting question, because that has shifted from when I've started things. And I'm planning on taking a break from what I do. If you don't know, I've worked in the commercial and industrial loading dock space as a service tech and an installer for almost 25 years now. I started in September of 1999, in the year of our Lord, before the turn of the most recent millennium that we find ourselves in. And yeah, it's shifted, because I'm always going to be working. I'm always going to be doing something. I don't want to sit idle. I think the way to think about it is what can you retire to instead of retire from? What is something that lights you up? What is something creative that maybe you do as a hobby? So, it's hard to say the time horizon, but we have enough money saved, and I plan to, at 50 years old, from 50 to 51, to just take a year sabbatical for myself, figure things out, do the YouTube thing a little bit more in depth, because lately it's been a grind, and I know I'm not supposed to say this, but whatever. Is that I leave the house at 6:45 a.m. about, and some nights I'm not getting home till 7 or 8 o'clock if get jobs run long. It makes it a little bit difficult to be a content creator, but nevertheless, I'm constantly pumping information in my head, learning new ways to think about things, sharing it with you guys, getting feedback from all of you. So I know this is a really long and convoluted way to answer the time horizon, and it is, I don't know, but I do know that every dollar of passive income that I create and have coming in is one less dollar that I will have to worry about earning to cover expenses and things like that. So the short answer is that I'm always going to be doing something to make money. And what I do here, researching, sharing information, learning from all of us to help us all become better investors. And like I did in the newsletter I still do it. I still make the mistake. And I'd wonder if all of you watching make the mistake of getting caught up in limit orders, meaning that there's a market order, which it buys at the current price. As soon as you hit send, whatever the current price is, that's what you're getting. And you can do a limit order, which is below the current price. So, I did that with Visa. It was around $259.75, $259.80. For brevity's sake, I made it $259.75, and I wanted $259.50. Figured, round number, I'll get there. And it just never went. It just kept going up and up. And for the rest of the week, it just went up. And now we're around 267, almost 268. And that's what, that's what happened. So probably best, because about 25 cents was the difference on 2 shares I wanted to buy. And, if I hold those shares for 10 years, 25 cents is going to be a rounding error with a quality company like Visa, assuming they maintain their current moat and growth vector and trajectory, right? So, also, Starbucks. I've goofed around. Yeah, they got a new CEO, and I know everybody did a video on it. I'm excited for it. Brian Nickel coming over from Chipotle. Everybody, are you sure that you can't hear this fan? It sounds really loud to me, but maybe I'll pop it off if somebody says, yeah, it's distracting. So, yeah, Brian Nickel coming over. He's a rock star, right? He's like a superstar in the business, in the world of CEOs. I guess if we were doing a fantasy CEO draft, he would be a top 5 pick. And, by the way, before I finish, I just got to give you a shout out, man, that you are making $57,000 a year in dividends and adding with every investment. Dude, that is awesome. I think one of our goals is to try to live on somewhere around 40 to 50K a year. So even if we can get 25K a year in passive income, that's huge. Between my wife and I mean, that's peanuts that we got to make to just fill in that gap. And, we're not really lavish people. We like taking trips. So, dude, that is just awesome. Keep that up. Get it to 60K. Just keep doing it. John, what did YouTube just told you? I gotta know. Maybe I missed what you said, buddy, but let me know. Let me know. So yeah, what did you guys buy this week? What are you thinking about? I know earnings are winding down. I read that the Jackson Hole Symposium, the Fed's meeting out there, I guess, is happening this week. But honestly, it for me, maybe if you're more of a short-term focused trader or investor, that's going to affect you more. But when I think about a 10-year, position in Visa, I don't really know what the Fed could do that's going to make that big of a difference. That's going to not harm the business, or won't not harm I don't know what I'm trying to say. You know what I'm trying to say, right? Lisa and Prez, you guys know. Oh, by the way, when you guys were live, I got the alert. You guys have the worst timing for me. It always is. I was in Costco shopping with my wife, and I understand. It's no surprise why Costco keeps going up and up and up. in stock price because there was so many people there. We spent after tax $227, and it's funny. Within the first 10 minutes, we had three things in our cart, and I told my wife, I said, "What is that about? $60 right there. We're at already." So they, hey Andrew, kind of like a religious conversion, better late than never. But you're not late, man. We're early. We're early. I came on early. In Enbridge dividend is $517. Pat, we'll do a little bit of news, and it's nothing big on Enbridge. I did see a blurb about them. Yeah, Shamir's. Hey, Canada has hockey, man. That's gonna start up soon, right? There we go, Ivan. What's going on? I already said what's going on. I may say it more than once. Just roll with it. If I become a bit redundant and repetitive like a fembot, well, I wouldn't be a fembot. I don't know what the other version. What's a male robot? What's a famous male robot? We got the Terminator, right? So if I become like a T-1000 and I start, repeating myself, I'm malfunctioning. Just go with it. I'll be all right. But you're buying Disney. That's interesting. I did see that the joint venture, the sports streaming joint venture, right, between, let's see if I can get them, Disney, Fox, and Paramount, I believe, right? Or is it Warner Brothers? I think it's Paramount. It was blocked by a judge. They were going to charge $42.99 a month for just the sports. So it's crazy, all the bundling in the streaming. It shows how hard it is for them to make money. And it's just a tough business to be a streamer. So they're trying to get creative, and we'll see what happens with that. And then Google. You're buying Google on the dip. UPS is hurting. So I've been doing a bit of, I assume, value investing. Google, the news on that is that they may be looking at a breakup. So I haven't thought about that too much. But, if they're like oil companies, Andrew Carnegie, when they broke up Standard Oil, he was happy. He said, this is going to be the best thing ever. And it turns out it was. And then the Blob, when they broke up AT&T, Ma Bell, right into all the baby bells, it literally, going back to Terminator, when he was, blown apart and the liquid, I can't remember what they called it in the movie, but, the liquid part of the being all started coming back together and getting bigger and reforming. That's what's happening when you have all these smaller companies over the years. They just keep getting back together. It's like the AT&T, the Ma Bell is starting to reform. So that's kind of a fun thing to watch, I guess. Hey, here in Chicago, we've got the DNC convention going on. I know some of you have said be safe. Thank you for reaching out. I do appreciate it, but we'll see. I heard tonight there's already I guess, Michigan and Wacker. It's a big intersection in Chicago is already shut down from protesters. So not entirely sure what they're protesting about, but hey, I just hope everybody stays safe. Protest, that's what I encourage, but not non-violent protestation, I think is awesome. If a lot of you aren't aware, in 1968, there was some pretty bad riots here, 10 years before I was born. That's kind of crazy to say that 68 was 10 years before I was born, but it was over the Vietnam War and the Johnson administration, and Chicago police started attacking the rioters, beating the protesters, and then it turned into a riot, nasty riot. So a lot of businesses here have been boarding up windows and things from what I've been hearing, and hope everybody stays safe. I just hope nobody gets seriously hurt. Keep it safe out there. Let's positive thoughts and well wishes to make your voice heard. But yeah, Chicago, by the way, has had a lot of conventions. The first one, I think, was 1860 with Lincoln being nominated. Puckman adding Wendy's. That's interesting. I don't know. Wendy's looks... I think I'd rather go with either Yum or McDonald's. But that was going back a month or so when I was kind of looking at them. And Vici. I bought one share this week. One stinking share. And it was one share of Vici. That's our 201st share of Vici. So I just feel comfortable buying them and, looking for it. I know there was some hubbub about them loaning money to Venetian, but it's with good reason. It's not like MPW where their tenants Steward. Seward. I got Seward on the mind. Steward, right, is struggling, and it's almost like they're propping up a struggling tenant. Venetian's not struggling. They got the Sphere. They're trying to make improvements to Vegas. Vegas is growing, and they want to keep with that growth. So they're using the money, and the loan, from what I've read, should be accretive to Venetian, and it means they might work in, a higher rent escalator, however that goes. I didn't see, but a little bit of a different situation. But you always want to be skeptical if you see a landlord making a loan to a tenant. We got to know what that's about. Yes, I would like to know, Pugman, why you're adding Wendy's. I'll second Shamir's voice. By the way, Shamir, you responded to my newsletter. A bunch of you did. I got caught up in my garage, so I will respond to those. If not tonight, by tomorrow afternoon. Trust me, I always do. You guys know I'm good for it. So there you go, Prez, buying more VTI. And my wife, I'll do a 1-year video later. I think we started it later. So my wife, we open up a Roth for her, $50 every Friday, automatically buying VTI. And I want to see, compared to a couple of my other portfolios, like what that does. So yeah, just automate it. That's one of the hacks to wealth building, right? Is to just invest and make it automatic so you don't even think about it. And it's funny, every Friday, and I forget. I'm working, I'm doing my thing, and I hear an alert go off, in my earbuds. And I'm like, oh, what was that? And then I look, $50 worth of VTI I bought, 0.0183 shares, whatever. And it's just like, wow, look at that. Building wealth and not being surprised. It's like, hey, you just built a little bit more wealth. That's another brick in the wall of your wealth, or the path to your financial independence, whatever it is. What are you guys building? Are you building a wall? Are you building a path to financial independence? Got Mr. Shannon Galantine buying Realty Income, Energy Transfer, Energy Products Partners, which I did get just under $100 in dividends this week, and Visa. I should have bought those 2 shares of Visa, Shannon, so. What's running a little skinny? Watching closely, just read their second quarter report. Who's running skinny again, Pat? Was that? Oh, that was. Oh, where is it? Where is it? It was the kid. Enbridge. That's what it was. Here we go, John. Mr. John. This will be our first one of the evening. Is 3. I'm doing a turnaround. Price already up to 127. So. Yeah, I think. Oh, by the way, sweet man. When were you born? Who's older? I'm 420, April 20th, 78, and it's been annoying as hell because since high school, every time I run into a person, they're like 420. No way, that's the awesomest birthday ever. I'm like, you smoke too much weed. It's just a day. So 420, I think, is the police code, right? The CB radio code for marijuana or whatever. So it's become a badge of honor for potheads. It's like their holiday, April 20th. Yeah, it just never was my thing. Made me paranoid. I tried it a few times, and I'm just like, and people do this again because why? It was not pleasurable. So, John, getting back to you, to 3M. From what I've seen, they have a new CEO, Bill Brewer, I think it is. Bill Brewer, I believe, William Brewer. He was the CEO and chairman of L3 Harris, ticker LHX, which is aerospace and defense, kind of like a more watered down or smaller version of a Lockheed Martin. The Hubble telescope, or was it the new one? What's that new telescope? They had a hand in putting some parts on it, but yeah, I think people got excited, and from what I've read, if you would have bought earlier this year, sold Solventum, and then just sold off after that jump, you would have been up about 60%. But in their earnings call, their CEO had said that their products are aging. R&D has been not what it should be. They've had the forever chemicals, the PFAS. I don't know. I used to know that it's like polyfluoral alkyl something, just PFAS, forever chemicals. It was in like non-stick, things like that. So the PFAS, and then the CAVE2, the earplugs, the military earplug lawsuits that they've had to really battle, those are starting to get resolved. I don't remember if they have been resolved, but he says their products are aging. The company's kind of stagnant. It's going to take time to turn around. It's not going to happen in a quarter or two. And he kind of paints the picture that the turnaround is going to happen years down the line. Remember, they're a big company. And the most concerning thing, and let's look at it real quick, Mr. John J. Let's look really quickly and see exactly. So it's better to show you and don't tell you, right? Show me, don't tell me. Shamir, that's a Rush song. I don't know if you know who Rush is, but I think all you people in Canada had to, I think that was government mandated. You had to listen to Rush for a set amount of time in order to get your driver's license or something. So we'll just do news and then we'll go right into, we'll just dovetail it right into your 3M, John. So they downgraded the Kohl's retail, right? If the economy is weakening, going to be bad for Kohl's. So they put their dividend at 20, very unsafe. Currently almost 10%. Yike. Scotiabank, yeah, up there in the Great White North. They reaffirmed their safety score of 70 safe, but they are, because I listen to Mike the Dividend Guy up there in Canada, really knowledgeable about the banks. If you don't listen to the Dividend Guy podcast, why not? Mike Vahu. He knows about them, and I think he said it's a bigger risk, bigger reward. I'm going to paraphrase and hope I got his sentiment right, that with BNS, they're trying to expand into Latin America. Why? I don't know. That makes me nervous to think they know banking in Canada, but maybe if they were expanding into Buffalo, Connecticut, Maine, it's maybe, but Latin America, I hope they know what they're doing. So just something to watch out. And they made a large investment into something Darth Dividend, Key Corp. It's a bank headquartered in Cleveland. Downgraded Baxter Health. I've never looked into this healthcare equipment company. Downgraded to 40 unsafe. Couple more, not a lot this week. Franklin Resources, ticker BEN. I like the logo. It's it's a younger looking Ben Franklin, but ticker BEN. Very nice, huh? Anyway, so founded in 1947, another company I honestly I don't know much about. They refreshed their outlook on them, so 70 safe. Albemarle, this is one we did own, wrote it up from the 90s to 170s, sold our 10 shares, bought more Johnson & Johnson, and then Albemarle shot up to, I think, over 300 a share. That was when the EV was going nuts. Anything EV related, it was a bubble, just buy. Downgraded to 70 safe. Lithium, EV's been getting hit. The lithium demand is drying up. So that could be interesting, but it could be a bit of a risk. They may have pressure on that dividend, but they say they're committed. A couple more. Kellanova, Pringles, right? They own Pringles and other candies. They got acquired by Mars. As long as the government approves it and allows it, as long as Big Daddy lets them do it, they'll do that. But 83.50 a share, as you see right there, is what that's going to go for. So if it's not there, most of that arbitrage may be dried up already, and that just means buying what at 83.50. If it's at 80, you'll know you'll get 350 a share, but you might have to wait a while. You'll get a little dividend until that happens. So Mars getting bigger, by the way. Two more. Michigan-based utility firm CMS Energy was upgraded from 52 to 70 safe. Does anybody own CMS? Another one I'm not familiar with. 60% of their revenue is from electricity, 40% from natural gas. That's ticker CMS. And then we had Enbridge, ticker EMB. I told you, Pat. Refresh their outlook on them. 6.83% yield, dividend safety score of 70. And they go back to 1949. And John, I got you, my man. Let's look up 3M and why I had sold it and some things that may be an issue. With 3M, borderline safe dividend safety score of 50. See that big negative dividend growth. They cut the dividend, and that's might be a hard and fast rule for me, but if a dividend cut happens, I think it's time to sell. But this one, it worked out for you. So it just goes to show there is no foolproof way to invest. There is no 100% of the time this will happen, whatever. But, oh, they upgraded them. That's what they did. So they were at 40 unsafe. Then they upgraded them in May to 50 borderline safe. But I'm a little big here. I'm a little big. Dividend growth, yeah, it had been flat. That was one of the first red flags. Just flat for a good chunk starting before the pandemic. So no years of dividend growth. And that was one of the things. Penny raise, penny raise. I mean, 4 cents, right? Penny a quarter raise, and then the big cut. Also, they spun out their consumer health products, which was Solventum. Boy, that's in fad, right? J&J did it. Yeah, it just, if you believe in dividend yield theory, not a good time to buy because the dividend yield is currently 42% below the 5-year average. PE's up. Yeah, it just feels a little bit frothy to me. Oh, why aren't you loading up? Come on, don't do it to me. Let's hit refresh and hope to God this loads up, because that's, hey, there we go. It worked. It worked. So free cash flow payout ratio was a little bit high, coming down. Yeah, 68% could be a little bit high, but one of the most telling things will be, yeah, look at the free cash flow per share though. I mean, it's just kind of been stagnant going back to 2014. It did jump and then drop. So you wanted to see that jump and then hold the jump, hold it way up there. But yeah, just a lot of sales growth up and down. It's like a roller coaster, it's like a jack-o'-lantern. There it is, the revenue. I understand they spun out Solventum, but that was recently. So revenue has been declining, and it's basically been flat since 2014. You know, free cash flow and revenue have been flat. I mean, they still have really high, good margins. Now they're still buying back shares. 555 million outstanding. Let's get through this quick. I'm starting to pull a Kevin Burgess here, getting hung up. But yeah, margins are still looking good, but that growth has got to come from somewhere. And they have a bit of debt. Looks like they spun out a bunch of it with Solventum when you see 70% net debt to capital down to 49. I don't know what Solventum got saddled with, but I don't like their interest coverage ratio. So not for me. Could be a good time to take profits. I just don't, I don't know what share site is. Tell us that. Trivon, what's up, man? He's buying Mars. What is Mars? Wait. Well, you're not buying those. Yeah, so exactly. I was going to say, I wish I could buy into Mars, but they're not publicly traded. They're private. So you're exactly right. That $83.50, when it finally closes, every share of Kellanova will, if you have one share of Kellanova, you're going to get $83.50 in cash. So yeah, no more dividends. All that revenue, everything is just going to go inside to Mars. So good question though, man. You know, and it's funny, we can forget that there's case in point. On last week's newsletter, somebody asked me, why are you still buying Starbucks when they're losing money? And I was like, whoa, what a minute. I'm looking at the margins again and make sure I'm not losing my mind, that there's not a gas leak in the house or something. So I asked them, what do you mean they're losing? I was like, look, their free cash flow is, or their free cash flow, their free cash flow margin was 10% the last 12 months, which means that 10 cents out of every dollar coming in the door in revenue is making its way to free cash flow. And with free cash flow, you can do a lot of interesting things like buy back shares, pay down debt, pay a dividend, carry it as cash on the balance sheet, reinvest into the business, mergers and acquisitions. So free cash flow is very, very important to a business. So to have 10 cents of every dollar coming in make its way down, you know, it's kind of like going through a filters where things get siphoned off of every dollar. Selling general administration, you got to pay the people that sold it, the people that work. So free cash flow, man, that's what's left over after your cost of running the business and producing the product to bring in that revenue. So really good. Can I check Ben versus T Rowe? Remind me if I forget. I'm just going to do what Simply Safe says because I've never looked deeply into either of those. I've never, put it this way, I've never taken Ben out to dinner. Bought him a nice bottle of Chianti, a nice prawn something meal. I saw prawn at Target today, frozen prawn or something. So that's probably not a, ritzy food, but I've never looked deeply into Ben's eyes and said, "Tell me what you're all about. What's going on, Ben? What are you doing? How are you making money? Let's talk about it. Let's spend some time together. Then we'll go back to my place and have some natural light, and you can tell me more." Is that weird? It's probably really weird, but it's okay. So we'll tell you what, if I forget, I'll try to remember. I want to get caught up because I'm going to pull a Kevin Burgess. Okay, so that was a portfolio tracker. Those are good. There's a lot of them out there. By the way, I was on Ryan Williams' live stream the other night and saw that Snap stock I think I got. Or is it Stock Snap? He created, so... Yeah, I'm sure there's going to be that, but I think I'm right about 25 miles almost directly west of the United Center, so not exactly next door, not that close. I mean, 25 miles is a good distance, but so Prez, I got you beat by 5 months. That's okay. I like it. I love hearing people born in 78 because you get a lot of references and things I do then. Did you watch? I was just talking about it with somebody. Was In Living Color. Dude, just great. Unfortunately, maybe fortunately, I grew up in at a period in my mother's life with my stepdad. We were very religious in that time. And I was not allowed to watch Fox, Simpsons, Tracy Ullman, In Living Color, whatever shows else were on then. So I would literally have to sneak it. I would pretend I was doing homework. I'd have the volume on. I had to leave the door cracked, and I'd have the volume on so, quiet. And it's sad. I had to sneak In Living Color and try and not laugh out loud. But plus, you didn't want to be out of the loop because everybody at school would be talking about it, the skits and things. So, Barron's Jim says had positive things to say about LHX L3 Harris and defense stocks. Yep, could be. You got, I got my 10 shares of Lockheed Martin, General Dynamics I once held, L3 Harris. I think Ball, ticker BALL, even has some goings on with the defense stocks. Paper lacing in the night Chicago died in 74. So, Puckman, you got me beat on that one. That was 4 years before I was born. I don't remember that. Yeah, that's sad. And yeah, you're right. People did die. I mean, I didn't remember that it was 45. So, Shamir, they're going in house. Mars is going to be a behemoth. Temptations. It's funny. My cat. I was going to say my cat buys these Temptations. Yeah, he loves them. He goes to the store. He asks for $10. We give it to him. He goes to Target. And he still on it. Temptations. It's a brand. Boom. You look on the back. Who's it made by? Mars. So Mars is even in pet food. Steve, we started at 7:30, man. Come on. Get with it, man. Look at you guys are all showing up at 8 o'clock. We've been going. Well, I told you all. It's true to my word. I'm missing my tea. I'm missing my tea down here. It would be nice. It's like, cue the delivery service. And yeah, I'm going to get crap for that later. But what is she doing up there? Ma, the meatloaf. From was that Wedding Crashers? Or Old School? No, that was Wedding Crashers. Will Ferrell. The meatloaf. Let's hope. Fingers crossed, Janice. I got my eyes, my fingers, and my toes crossed that everything's going to be okay. There's no loss of life going to happen. Buildings will be all right. It'll just be peaceful protesting, making their voices heard. Let's hope. I do hope so. Positive thoughts. Everybody have positive thoughts. Don't worry about it, Greg. We just goof around here. We talked about 3M. Has anybody else been buying 3M? There's Kevin, as we talked about. Not trying to pull a Kevin Burgess and get too caught up. Jim is saying that Ben looks ugly and oh, thank you. Very well. I got my tea delivered here, everybody. Why don't you want to say hello to people? It's only 58 people watching. You can say hello. People might not like that you're a Cubs fan.
Hello to people.
Yeah, so.
I don't fit on this side.
No, I don't know. Well, you don't have to stay. We just wanted to say hello. I was just goofing around. I didn't think you were going to, but.
Does it say StreamYard there for everybody?
No. Yes. See, I got it right there on the thing. This is how it functions. We're older. We're both pushing 50, so.
Push it yourself.
Mm-hmm. Anyway, what we're saying, Jim, that Ben looks ugly. We'll look at. All right, now I gotta know. Shannon, Kevin live streams Monday nights at 8 Eastern. Let's see. I want to see what Simply Safe gives them. Just for poops and grins. I don't know. I want to swear sometimes. I don't swear that much, though. They say you shouldn't swear a lot because it makes you sound like you have a lower intellect. So that's one thing I tell my kids. What are we doing here? Ben. Ben gets dividend safety score of 70 safe, 5.5% yield, and Tro looks like it's an 80 safe, but a little bit lower yield. So there you go. Going off Simply Safe and me having never looked at either of these, the nod goes to T. Rowe Price. Oh my God, it looks like I got caught up. But yeah, please do. Everyone watch Kevin. It's fun. You know, we can tease him. It's so much easier when you're on your guys' side of the stream or whatever. Oh, that's too hot. Let it cool down. Miss Russ. That was my wife, Jenna. If you missed her, it was like Halley's Comet. You blink and it's gone. So you have to go back. Yeah, healthy, wealthy, and we hope wise, right? So I told you guys what I bought. Some of the dividends I received are, let me pull it up in my newsletter. I think I had it linked below. Hey, I only got one unsubscribed from sending it. Nice. It's the craziest thing. No matter what you do, I talk to Ryan and other people about it, and they say it's just the nature of the beast that every newsletter you send, people will unsubscribe, and it's just, you don't worry about it. You just think, well, that's more people, room for more people that want to be there. Hey, thanks, Puckman. I'll be sure to tell her that. But what am I doing now? Forgetting. Oh yeah, I'm gonna show you my. Yeah, I talked about Visa. Trying to get a quarter lower, and it cost me $8. There's Visa's dividend growth, everybody. 18% 10-year CAGR, 16% 5-year CAGR, and they just raised the 16%. They almost raised that dividend as fast as Nextar Media Group does, ticker NXST, which is still my number one position. Yeah, just talked about that. Market order, limit order, a little bit of teaching there, but there's our dividends received. Who else got dividends from AbbVie? Fun thing I have to say about AbbVie too, ticker ABBV, 38.75, EPD 91.88. Agree Realty, monthly dividend stock, $22.75. Realty Income, $52.66. And Main Street Capital, $36.75 for a grand total of $242.79 in dividends this very past week. And yeah, I share the little thing from Schwab, and then there's what I bought. I sold 7 more of SCHG. That was all of them. It popped over 100. Sold a few below, few over, so almost $100. And again, like I explained, it overlapped a lot with our 14% of our investment net worth is in DFUSX, which is also a large cap growth ETF. It's just a mutual fund. It's not an ETF. Excuse me. I do know the difference. Couple notable stocks going ex-dividend, and yeah, Warren Buffett buying Siri. And then I end it. If you didn't know, at the very bottom, I pull a song every week from the Dapper Dividends jukebox. Dude, I was hardcore into around here in Chicago. It was 104.3 WJMK. It was oldies. I listened to that for a year and a half straight, so that's why I broke in with Mama Said by the Shirelles. Just fantastic. It's so... I love listening to oldies music. It's so relaxing and has just such a unique feel to it. So good. The Shirelles just so good. So talented. Okay, that was the newsletter. So what did you guys... Do you want me to look up something else? Do you have any questions? What do you want to know? I'll answer anything within reason. Not gonna tell you everything because it is an investing show after all. I mean, we don't want to get. Oh, dude, thanks. It's funny, and I know she didn't want to because we were in the garage for 3 hours. I showered. We're cleaning out stuff. We hit that thing where we're kind of like, what is this? I don't know. Garbage, just a big garbage bag full of stuff. I'm coming across things that I had this, I don't know, a plastic fitting for something, had dust on it. And it's just like, what is that? I'm like, look, I don't even know what this is. And it has dust on it. Garbage. Get rid of it. Ivan, good price. Good question about what price I would buy. A good price. There's your answer. Yeah, I think right here is fair value. 260s, 270s. It's just I get cute. I was really liking buying it in the 250s, and I was really hoping that we would have a market correction, and we still could, if and when the Fed cuts rates, right? They're gonna cut because the economy is slowing down and things aren't looking as rosy. So that could put a damper on some stocks, and if people are buying less, it means they're charging less. They're using their cards less. So that could affect some of the short-term revenue for a Visa and MasterCard. And that's, yeah, Fast Eddie, I'll do that next. So I don't know I think Alpha Spread thinks they're pretty overvalued. I'll show you that right now with that. And then I'll show you oh, look at this. Ladies and gentlemen, boys and girls, I have to give a toast out of the Starbucks cup to somebody I do a lot of texting with, Mr. Harris Malberg from the One Penny at a Time podcast, which has been paused. It hasn't gone away. It's just on pause. Nice to see you swing by, man. So, we talk football too. Nice distraction, Nice distraction to talk football. By the way, I'm going to record it this week, man. The video I shared, the Berkshire, I forgot the 13F was dropping, and I had to pivot quick and do that. So, what am I doing now? Oh yeah, Visa, and then the want list. I'll just go through that really, really quickly for you. So, let's see what Alpha Spread says on and Alpha Spread. I think a lot of you can do this. I'm logged in still, but I think they're even giving it to you if you're not logged in. They'll just show you the intrinsic value. So Visa, I know they're going to say it's overvalued. They do a discounted cash flow analysis. So from DCF, it's at 182. The relative value 187. So they have an intrinsic value of 185.28, but that's the intrinsic value. But when you have a very, very high quality business, you got to pay up for that. It's very rare that you're going to see Visa gets $185 a share. And that's why Visa dips into the 250s, the low 250s, even though they had a bit of a weaker earnings. Boom. People buy. People are snapping those shares up. It carries a premium. It's just the way it is. And I'm learning you have to get over it, because if the business is going to keep being high quality, they're going to keep increasing the intrinsic value, and the stock price is going to keep rising. So I really doubt we will see it at ever under $200, and unless something really crazy is going on. And then go back to Simply Safe, because Fast Eddie asked. I have a portfolio here, and it's been slow, and I've been so busy with other things that it's good to have a watch list, which is my quality prospect pipeline. I remember I talked about this in a video. All I did was, when I come across something that looks interesting, I throw it in here on Simply Safe, and I think I shared this also on the Dividend tracker. I have a link for that somewhere, but so I don't own these. This is just to keep track. I put one share in, and the gain loss is from the day I started. That's too big. From the day I started watching it. So I guess I can, well, I'll read them. No, I don't want to read them all. Armanino, let's do from, how about gain or loss? So some of them have gone way up. Mueller Industries, Old Dominion is one that's really interesting. By the way, we study billionaires, did a really deep dive on them. You can always pause the video if you want to see these tickers. TJX companies, that's TJ Maxx. Sierra is another store they own. I don't think Marshalls, I don't remember if Marshalls is also part of TJX or is it Ross? I don't remember that one. Now I got to look. I don't want to give fake news. They own Home Goods. That's what it is. TJ Maxx, Home Goods. Yeah. Solid looking business, by the way. Cintas. Some of these are just also pretty overvalued. There's Ross Stores. They own just Ross Dress for Less. Okay, that's it. I thought they owned more. There's Zoetis. I know Ryan Williams has been on them. Amphenol. They've been doing pretty well. Those of you in Wisconsin, Badger Meter, ticker BMI. Of course, MasterCard's on the watch list. Yeah, it's up 6% since I threw it on there. This one, Alimentation Couche-Tard, owns Circle K. Mike, the dividend guy, big fan of them. They're up there. Shamir, I'm sure you're familiar with ANCTF. I know I say it too fast. I've been listening to Mike too long. Alimentation Couche-Tard. Maybe I even said it wrong. I don't know. Landstar, they're kind of like Old Dominion. Pulte, Granger, UFP Industries. Toro, I just bought a Toro lawnmower. Remember, my lawnmower died a few weeks ago. Tractor Supply, got Google on there. They're down 2%. So this also helps too, because from the day I started watching this, which might have been a month or two ago, Google's down almost 3%. So it kind of helps me too think like, you can sort by the gain or loss since you put it on the watch list and say, you know, here, oh, look, Papa John's is down 6.5%, which, by the way, they do have a new CEO. So they had a little bit of a jump in share price. But I started watching them at 49. They're at 46 now. Build-A-Bear Workshop, down 7%. They do pay a dividend. Just started. And look at Williams-Sonoma, down 10%. All right, this is going to get boring for some of you, but yeah, pause the video if you want to look a little bit more. And the big loser, look at the second, Domino's Pizza. Look at that. See, now that's an idea for me. I didn't realize that they were down. I knew they had a poor earnings. Didn't they reduce guidance? So that's why they got hammered, but very useful because now I know that since I was attracted to them first, they're down 14%. So could be a good time to look into that. So there you go. Those are the watch list stocks, the quality prospect pipeline portfolio. Everybody. Oh, do I have it? Shannon, I see your question. I don't have it. Too bad. I would love to do it. Idiocracy, one of my favorite movies. And you said, what led you to start investing? I just don't know how people don't want to invest. What led me? I like money. From Frito. Yeah, honestly, I would... There's two periods. There's, well, three, I guess. Before I invested at all, my first taste of the 401k was in 2003. Didn't put in enough money. Not nearly enough. I think for a while I was doing 1%. And I don't know. I was in my early 20s. At least it's something, right? At least it's something. But I never had somebody telling me, buddy, you got to do at least 15%. And that's why I told my kids, when you start earning money, if you want to be financially independent one day, and the quicker the better, the more you can save, every dollar that comes into your hand, look at it as 85 cents. Just say, I have 85 cents to figure out how to live with. That other 15 cents, I'm like, it doesn't even exist. Don't even think of it as there. It's just gone. You don't even have it. So I wish somebody beat that into my head but nobody did. Yeah, I got a lot of good memories though. Took a lot of trips with my then girlfriend, then fiance, now wife. Yeah, so there was that period with the second one, investing with 401k, and then somewhere around 2017, I just had it in my head one day that I think I was hearing stock market news on the radio, and I thought, you know what? I'll bet you I can learn how to trade and get really good at it in a few months and probably end up quitting my job if I wanted to. I'll get so good at it. So it was just, I told the story before, it was going from penny stock trading to swing trading to learning that can't control my emotions and stick to systems and rules, which is one thing I'm still trying to figure out with selling covered calls. I'm learning on and off, but I need a system and a strict rule base to stick to. So, but anyway, that's okay. Good. I see a few more of you want to look up stuff. Oh, look at Harris want me to look up Progressive. Let's do those three. You guys got boom, boom, boom. After I get Mr. Jimmy. Receive payouts from all those you listed. Hey, fun thing. Next time you meet a new baby, if you want to get a rise out of the parents, it'll work. It works better with male babies or boy babies. I don't know what you want to call biologically. Kids born with penises. I guess I don't know. What do you want me to say? But you, when they tell you the kid's name, ask them, well, what's the middle name? And when they give you the full name, just say, oh, like the serial killer. You just straight face it and just see their reaction. It's kind of funny because nobody's like, they'll have that moment where like, oh, no, wait, did we just name our son after a serial killer? So it's always good for a good laugh. But you got those plus PG and EPD. Nice. And then Andrew also has the trifecta of ADCO in Maine. All right, so Harris wants us to look up PGR. Steve wants to know about NL. And D-Nice wants us to look at OLED, which I think isn't that an advertising company? All right, so we'll go PGR, NL, and OLED. As Ian Lopuk would say, so I can time it. As Ian Lopuk would say, I screwed it up. On the screen right now, we'll see. All right, first up, we'll go in line. We'll serve you all in line. 52, borderline safe, Mr. Malberg. I don't think I've ever looked at Progressive property and casualty insurance. Dividend yield of 0.17%. When did they start? And we won't read all this. 1937. All right, in Ohio. Shout out to all of those of you in Ohio. What is the deal with that, man? What's the deal with, COVID? So they had grown it nicely, and then COVID happened, and they cut. 21% 20-year CAGR, though, but negative 14. And they are just way, way below where they're almost at $5 a share before COVID disrupted stuff. That's very interesting. I wonder why. Looks like they paid a special dividend in January of 2024. I'm thinking is what that looks like. Yeah, but we'll go a little faster here. It's doing very well. It's at its 52-week high. But yeah, you look at their earnings payout ratio when you're looking at an insurer, so very low. Easily able to cover that dividend. Beautiful. Free cash flow per share going up. Earnings per share going up. And again, earnings per share, better to look at with an insurer than free cash flow. Still very nice. Always positive sales growth. For a lot of those years, there was double digit every year. They don't really buy back shares. Kind of flattish like a radish. But yeah, look at the revenue. That's what you want to see. Just every year, consistently stepping up the revenue. So that's solid. Nice return, nice margins. Nice margins. Of course, coming out of COVID, crushed some of those. And net debt doesn't seem to be too bad. So yeah, it looks at. I don't know, man. It looks good, but it's probably, I'm gonna guess, a little bit overvalued right now. But like all things, this is just a very quick overview. And when I look at this stuff, it's to look at the numbers to see if I want to dig into the business more. And there's times like with Harrow Incorporated that the numbers weren't good, but because I know what they were doing and trying to do, and how they just had a really easy to understand plan for growth, and everything's been hitting on what they wanted to do. Office services and supplies. Okay, an unrated dividend yield of almost 5%. What do they do? So they own CompX. I don't know anything about CompX. Electronic locks. Very interesting. So they do locks, I guess. Aluminum accessories, dash panels. All right, founded in 1891. So that's something I would, that seems easy to understand, but we would need to dig into. But yeah, you're not buying this for the dividend, man. That looks yucky. That dividend growth is disgusting. But again, it's always about the underlying business, right? Even though they did grow it, they did grow it a penny, special dividend too. All right, let's see. Free cash flow payout ratio is getting better. It looks like it was high because of COVID. See if anything jumps out so I can get through this. Don't buy back shares. Sales are coming down a little bit, but they had a nice jump coming out of the pandemic. And margins are a little bit small, for just my opinion. And I know nothing of this business. According to them, they have no net debt, so pretty good balance sheet from looking at that. So I would say I wouldn't buy it for the dividend, and I would definitely need to take the annual report out to dinner and, give it the twice over. Become really comfortable and familiar. Roll up the sleeves, get in deep, and I can't think of the last word. Oh, OLED. Universal display. Oh, it's semiconductors. What did I say? Advertising? I don't know why that was in my head. So this is one sector that I'm not very proficient in. And, oh yeah, organic light emitting diodes. Duh. That's what OLED stands for. So, what do they do? Yeah, diodes, I guess. Probably for... I don't know. I don't know anything about this business, so all I can do is just look at that dividend growth. Stout. That is crazy good dividend growth. 42% 5-year CAGR, so I can see why you're attracted to this one. So nice dividend growth. And still, the dividend yield is 45% above the 5-year average. Yeah, forward PE, they're a semiconductor stock, so they're going to be a little bit hot, but yeah, right in the middle of their 52-week price range. Oof. We need to know why the free cash flow payout ratio in 2023, why their free cash dried up, and I'm assuming was not negative, but probably close to zero. Let's see. Yeah, free cash flow per share is 60 cents. I don't know, but then a huge bump up. It's interesting. I don't know anything about the business, and this is what you have to learn. Again, they don't buy back shares. That's not a deal breaker, They're returning cash to shareholders in the form of that dividend. Sales went up and up and up, but come down a little bit. Yeah, nice margins still. Very good margins. And I think good free cash. Well, last 12 months, they had a lot of free cash flow coming in. And it shows that they have no debt, apparently. Zero at all, according to this, because you can tell there's not even a interest coverage ratio. So balance sheet looks great. I guess if take it for what it's worth, they give it a 70 safe. Again, would definitely need to dig in more and understand the business. So hope that helps a little bit. You got Boaz checking in again. Wet the whistle, everybody. It's fun. We have fun here. It's Sunday night, right? The market opens tomorrow. I used to dislike Sunday nights. My daughters right now are really disliking Sunday night because they started school on Friday. It was only 3 hours. It was, I think, a little less than half a day. But tomorrow is, oh no, tomorrow's day one. But honestly, don't feel too bad for them. My oldest is starting her junior year in high school. Youngest is a sophomore, so, they're close. They're close to being done with mandatory school. Harris, you said TJX owns Marshalls. I guess I was right. I didn't, yeah, so if you log into Alpha Spread, they'll give you the best price for $247. Yeah, and, take it for what it's worth. Nobody knows the future. It's all an educated guess, and everybody's going to figure out a different intrinsic value. TJ Maxx, Marshalls, and Home Goods are all owned by TJX, and you forgot Sierra, my good sir, Rick Gilbert. And I know this because we stumbled upon in St. Charles, Illinois. I think it was the town south of it. We were coming home. We didn't get dinner. We went to Papa John's. By the way, there you go. Ticker PZZA. Got Papa John's takeout, and we were early. And there was a store called Sierra. And I thought, what's Sierra? Right on the door, it said a TJX company. I was like, Andrew, I'm sure there is. I guess we would have to look through each one, which we're not going to do. I wouldn't mind doing it, but it'll be boring as hell for all you watching. But off the top of my head, I can't think of... Oh, Visa. I think Visa's getting ready to increase it. I think they're about to make their fourth payment at what they're at right now. So I think Visa. Yes, Dr. Pepper. KDP owns A&W. That's correct. Stock took a dump in 2018 when they merged. Why? Which one merged? Keurig and Dr. Pepper merger. I don't remember that. I didn't follow it then, but my guess would be maybe there was a lot of debt or something. I don't know if one overtook the other. I don't know the story behind it, but you would think it wouldn't dip. But again, I don't know. I never looked into it. That would be... Jim's doctor told him this week that I was colorblind. It was a surprise that diagnosis came completely out of the orange. Very well played, sir. I like it. We call him Jim Dad Joke Bets around here. About doing Kevin Burgess. Oh, yeah, Kevin, I meant when... Because you want to give a good overview. Like, you want to share your opinion, not just, like, rifle through something. So I try to answer every single comment. I want to spend 5 minutes on every comment. But we're getting better, man. We're getting better. I used to laugh because when you're getting better at it too, when people chit chat with each other, that we just kind of go by it because you used to put it on and you'd be like, oh, and he says, what's up? Do you like Dr. Pepper too? And you'd be like, oh, he's asking so and so. I'm like, yeah, I used to do that too. So it's we got John with his dad joke that nudists are bad for the stock market because they're associated with bear markets. I like it, man. I like it. It's not hard to see that, right? We have an OLED screen at our TV. Once you try it, you won't be... I don't know what ours is. That's a good question, man. That's a good question. Oh, speed stocks. Hey, I could do speed stocks with the best of them, man. I'm learning just kind of scrolling up, looking for a pattern, something interesting to say. Something interesting like I just cut my hair again on Friday. I cut my hair. I haven't been to the... Now, I take that back. I did go last Veterans Day for the first time in probably 6, 7, 8 years. Because when you do it yourself, okay, I'm stubborn. I do it myself. And for the back, I'm in a mirror and like this. And, I like saving the money. I spend it on other things. But I went to get fixed, squared up. And then I'd like it because haircuts are free on Veterans Day for veterans. And then I give a tip. So I give a healthy tip So don't worry, it's just wherever I went, Bo Ricks, or I don't know if Bo Ricks is still in business. But Stan is late. Man, come on. Can't be late like that. We were waiting. We just sat around looking at each other, waiting for you to get here, buddy. Thoughts on this $23 dividend payment, Icon Enterprises. So the only thing I know about Icon is they give a return of, I don't think it's a dividend. Can anyone back me up on this or Google it real quick? But I'm pretty sure with IEP that they either give a distribution or a return of capital. I don't believe it's a dividend. And there was something funky with IEP where the money coming back to you was from like either new share issuance, or they would buy new shares. I don't remember how it worked. It's a really strange wrinkle, because I know I started looking into them years ago because the dividend was really high, and it was confused. You know, let's do this. Let's look at them on SimpliSafe, and let's see if we can see what might be going on with Mr. Good old Carl Icon. Yeah, 35. So there's the yield. People get excited like, oh my God, a 24% dividend yield. 35, unsafe. But I don't know if they'll tell about it. So I think they just, yeah, they're a private investment fund that's publicly traded. They're not going to tell me about it, but it's weird. It's a weird company, and the way they do things, like the structure is weird. There's a lot of family weirdness. Every quarter, you get a K1, so you're a partner, right? You're the partner. Partnership distributions are commonly considered a return of capital, which reduces your cost basis and defers taxation. So, yeah, so first of all, it's not taxed favorably, but I wish I could remember. And see, you would think that with a 24% yield and it's $17 a share, why is the market not just scooping up all the shares? Like, why, you know, free cash flow payout ratio is at 13,000% in 2021. It's such, I'm glad you brought this up, because this is a good example. Maybe I'll do a video on this soon. I'll do a little bit more of my digging and see if I can figure out what I forgot, why I did not invest. Free cash flow per share, $9, but it was, it's hard to understand. That was one of my things. Oh, there it is. There it is. Shares outstanding. Every year, as Macho Man said, going up and up and up to the top. The cream of the, I wouldn't call him the cream of the crop, but Dan Soder. Do you guys listen to Dan Soder? If you want to, it's a riot. At the conclusion of this podcast, of this live stream, whatever the hell we're doing, put in Dan Soder, S-O-D-E-R, Macho Man. Just, he does Macho Man better than Macho Man did Macho Man. It's crazy. But that's one of the, look at that, shares outstanding. So I think that's the wrinkle, is that they issue shares, they pay the dividend from the share issuance, and then the family somehow collects more shares. It's a bizarre thing. Margins are god awful. It's just net debt. Okay, that's not terrible, but negative interest coverage ratio. So I don't know. Maybe they're paying the interest on the debt with shares. So they're issuing shares and paying the dividend, paying the debtors. Yeah, boom, I just saw it. Jim, Ponzi scheme. That's what the word was that people were saying. Receiving a dividend from them is a pain because they would rather keep it and give you more shares. You're right. That's what I think it was, that it wasn't a cash distribution. You were getting more shares, right? So I think they were issuing more shares, and then that's what you were getting paid in. Yeah, that's. I'm glad you guys remember. Yeah, yeah. Talk of a. I didn't see $23 dividend. I think you meant 23% payout, right? Percentage. Yeah, more of a Ponzi scheme than a stock holding. Put it on my pipeline list. Oh, that's a good one. That is a good one. I won't show you guys that, but thanks, man. I'm gonna do that. It'll we'll see. We'll put it in the it's anything but quality prospects, so it's been added. IEP, I forget about them. I think that's what it is. Payout ratio negative 347% per Seeking Alpha. Now you see, Seeking Alpha would be a very good place. That saves a lot of time. Just read the analysis, see what the analysts are saying, and then see what the comments are saying. And that'll give you a real good flavor for not just people making, wild ass assertions, unfounded about something, just, I don't know, just throwing things out there, but good. I wouldn't touch it. I would not touch it. And I don't know how it's allowed to exist like that, quite honestly. But it does. And you know what you can do? Don't buy. Don't buy it. Just let it sit there. Let's, put the word out. Tell people don't buy it. What else are we going to look up? Come on. I'm in extra innings here. I did longer for you, just for you. So what do you want to know? Shoot a question. Comments, concerns, what do you want to look up? What do you want to, I don't know. I'm looking at a box of Cheez-Its. Hold on, everybody. One moment. Because we're going to do a little bit of my kids, right? Teenagers. My God, they live on this. Let's see. I think Kellanova was this. Look at this guy fumbling with this box. Of course, it's dark. I can't read. Yeah, Kellogg's. So, there you go. We flatten all our boxes here. Kellogg's owns Cheez-Its. Mars is going to own Cheez-Its soon. There we go. We did the news, Steve. You missed the news, buddy. It wasn't that much. It was we talked about Mars buying Kellanova. All right. SV, I have not seen your name before. I got a mind like a steel trap. I may not remember everything, but I know we haven't spoken before. So, Siv Sif, nice to see you. So you want to look up Kinder Morgan, and Frankie wants to look at FedEx, and Billy, good old CVX. So yeah, we'll look at those. Yeah. Oh, dude, you're right, Steve. Mars has just got they've got just a stranglehold on the snacks aisle, and it's going to be crazy what they own. All right, so let's see if I can remember. Kinder Morgan, FedEx, and CVX. And then Jay wants UPS. We'll see if I can remember these. We'll go quick. What is this? The lightning round. Isn't that Kramer, his lightning round? I'm sure I'm going to forget one of these. Kinder Morgan. And I'm not sharing this, am I? Look at that. I caught it. I caught it. Kinder Morgan. There we go. So you can pause the video always and take a peek at some of these. I think I got it big enough on the screen. I'm going to scan through, see if anything jumps out. I'll kind of pause here. One of the neat things, and you can pause this, when they do Outlook, it's this blue box on Simply Safe. They give their own outlook on it, as I hope it's not too long, but if you want to read your phone, pause the video. It's really cool. They really get you caught up on everything you need to know about the business and their opinion. We need to know why they cut that dividend pretty substantially and are not back to where it was in 2014, 10 years ago. I don't know what happened there. Don't know much about them. I'm so sorry. So sorry, everybody. Yeah, we like to see these two green. You want to see the dividend yield above the 5-year and either forward price to discounted cash flow, the price to adjusted funds from operation, and AFFO is for REITs. DCF you're going to look at as for like MLPs, and then price to earnings. So that's just kind of a very basic way to kind of see if something's at a discount. It's almost at a 52-week high. Want to look at their DCF, the distributable cash flow. Did I say discounted cash flow? The DCF payout ratio is pretty low. So I think their margins look, you'd like to see the DCF going up more than that. It's pretty much been flat since 2014. I would look honestly for the other businesses in their competitors to see if they have better margins and better DCF going up. Yeah, flat shares. They're not issuing. They're not buying back really. Sales again. You kind of want to see those growing. They've just been flat. Margins, yeah, it's kind of expected for their business. Yeah, it's very capital intensive business. Not my favorite. Net debt, not bad. Just not me. I don't know. What's the yield again? Is that what you're chasing? 5.46. Just always remember, don't chase yield. Chase the profits. Look at the underlying business. I think UPS was next on our list. And 69 safe. Yeah, look at that yield. I can already see. It is... When were they founded? 1907 in Atlanta, Georgia. I would have not guessed 1907. They reaffirmed them on July 24th, right? So they still say it's 69 safe. Cue up Bill and Ted. Dividend growth, yeah, not growing much. That's a concern, 0.6%, but 10% 20-year CAGR is fast. 12% 5-year. It's just they got some headwinds going on now, and I think they're very heavily affected by the unionization, right, with the unions, but uninterrupted dividend streak of 55 years, 14 years dividend growth streak. Yeah, microscopic dividend, token dividend raises, we call those, right? $6.52 a share. It's okay, you could bang the doors, we don't mind. Dividend yield is 50% above the 5-year average. So if you're a believer and an adherent for dividend yield theory, you can buy that. Yeah, down almost 52-week low for UPS. They should be okay. Yeah, free cash flow payout ratio is scary. That's probably why they're doing the small increases. Let's see. I'm going to go quick on this. Free cash flow per share, yucky. You want to see that growing better. Sales growth, negative, yeah. A little bit of a rough patch right now. Still buying back shares, down 857 million outstanding. Sales starting to drop down. Return on invested capital was stout before. So their margins are still healthy, but not as healthy as they once were. Just okay. Debt's still not too bad, but it did jump up. So if you believe in the business, and again, I would dig deep and try to get a really good feel where you think they're going, and if Amazon is really going to crowd them out. I think FedEx was enough. We'll just look at FedEx since UPS is fresh in our minds. Safety score of 64. Safety score of 64 for FedEx. And if you look at that, you can't see it here. I'll show you something fun. I got to Google it, though. I know you old timers to this show have watched. This is going to blow your mind. Watch this. Let me get a better image here of FedEx. There we go. If I can make this bigger. Let me switch over to this screen. So I had to Google this, but get ready to see or have your mind blown, everybody. This should be sharing. Come on. Hey, there we go. All right. You see the FedEx logo on your screen, everybody? Let me make it bigger. Like, stop moving it around. Now, do you see the arrow? Oh, there you are. Looking at my phone. You see the arrow? Look at that. In between the E and the X, it's an arrow. Once you see it, you'll never be able to unsee that arrow. Every time I see a FedEx truck, I'm like, there goes the arrow. I never saw it before. So many years, I never saw the arrow. So now you see that arrow, and now we come back to FedEx, which that made me think of it because it's not there. The X is too big. It's a messed up arrow. But anyway, 64 safety score, right? What was UPS? 69? 69. So FedEx is 64. They're actually a little bit lower. But when were FedEx founded? 1971. That's right. Jim Smith, I think, right? It's a very plain name with their founder. Dividend growth, a lot faster, a lot bigger dividend growth than almost said PepsiCo. $5.52 a share. And yeah, the market is liking them better right now. So they're closer to their 52-week high is FedEx. Let's see if we can tell why. Free cash flow payout ratio still very low. So that gives you more of the warm and fuzzy. Earnings per share looking a little better. Look at that trouble they had back then, man. Back in 2020. Gee, I wonder, why did FedEx have negative free cash flow in 2020? Yeah, and then they just came roaring back with the economy. But they kept that dividend going, man. Man, who's man? Sales growth, they have negative sales growth too, just like UPS. We're learning, people. Their sales are starting to dip down. A lot less shares outstanding, so 251 million. 10% ROIC. We'd love to see that over 15. You'd like to see ROE over 20, but still good. Still good. Free cash flow margin could be a little better. And debt has been slowly paying down, but Simply Safe thinks it's a little bit high. And then who did I miss? I missed two more. Billy, you wanted Chevron, and then we have P. Hal versus DVN. Okay, I don't know Hal and DVN, but let me get back to here. I just said it. Oh, CVX for Billy. For my guy, Billy Johnson. Hey, Billy Johnson. He's over there. I saw him at the... he was at the Piggly Wiggly. I couldn't think of my restaurant in Chicago. He's at the Billy Goat getting some cheeseburgers. All right, Chevron 90, very safe. Everybody, you all know what Chevron does. Won't read their. There you go. They were born from the 1879 discovery of an oil field near Los Angeles. All right, yeah, they're just solid. I mean, with oil, I think they're at like mid 30s for price of oil per barrel for break even. So when oil's at 80 and above, I mean, they're just printing cash. So we'll see that in a second, I'm sure. But average dividend growth, look at that, 112 years of uninterrupted dividends for Chevron. Looks like they should raise their dividend early next year. About even, this is probably about fairly valued, although 52-week price range is toward the lower end, so that's interesting there. 64% free cash flow payout ratio. Not bad. Let me just scan these quick. Free cash flow came back down a little bit. So I think that's when Earl that's when Earl was nutty, right? Negative sales growth. 1.86 billion, so they slightly bought back shares. Sales dropped off a little. Really high return on invested capital, so they're doing well. I think it could be a good time to buy them now, looking at where the price is. Not financial advice, just, oh, there we go. That's what they've been doing with their hoard of cash. They aggressively paid down debt, although it did pop up a little bit. And for those of you that may not know, that are brand new, so interest coverage ratio right here, what this means, this tells us how much money, so for every, so you slow your brain down, man. You have to pay interest on your debt, right? When you have debt, interest is due on it. This tells us how many dollars of operating income does a business have to pay every $1 to cover every $1 of interest on the debt. Currently, $53.11 for Chevron for every $1 of interest. They can easily cover that. And it's just when you get under 1 is a really, really nerve-wracking time. You kind of want to see 5 and above to give a little bit of wiggle room. So essentially, they have a really good fortress balance sheet right now. And then what did my other guy want me to look at? Hal versus Dividend. We're not going to do a deep dive because we're running out of time. Oh my God. Oh, Halliburton. We don't need to see it. So we'll just give you the safety scores. 60 borderline safe. So the other one must be Devon Energy, right? So Halliburton 60 borderline, and DVN gets 41 borderline. So looks like they had a dividend cut. Just going off that super quick metric, not financial advice for you. I would go with Halliburton, right? So those were quick, man. Those were quick. Watch the documentary on UPS, right? Now I know, 1907. Yeah, you did. You timed it nice, man. I'll drink to that. Got out around 157. We got to have you back on the live stream sometime soon. Always a good time with my friend from Canada living in I got an itch. I was just thinking, like, somebody told me that, I had a couple little red spots, and they said that's from mites. I guess the cicadas, they had a lot of mites, and the cicadas are now gone, and the mites are just all around. I was thinking, like, I just itched the same spot like 3 times. I was thinking of the Dave Chappelle, the crackhead, you know. But yeah, anyway. Looking at Seeking Out. Thanks for sharing that, Jim. I love it, man. Devon wins with 3 buys, Halliburton with 2. Oh, that's interesting. So they say, but and again, all these third parties, it's just their opinions. You take it for what it will. None of them are perfect. It's not gospel. It's just their educated guess. So, but again, if you know nothing about nothing, hey, it could be a good starting point, you know, or it could reinforce. Or if they're saying something different, you could say, okay, what am I missing that they're seeing? And you got to investigate it. If you don't want to do any of that, just buy an ETF. Like we talked about, my wife and VTI. Just buy VTI. VTI is the total investable U.S. stock market. I know in the FIRE community, they talk about VTSAX and chill. If you've heard VTSAX. Well, that's the mutual fund version, right? Remember, whenever there's an X on the end of the 4 letters, I think it's always 5 letters, but the last letter is an X. It's a mutual fund, and that's held inside of 401ks. But there's an ETF version of a lot of these, and VTSAX's ETF version is VTI. So they're identical funds, but you can buy 1 share of VTI in any brokerage account, but you're not going to be able to buy VTSAX. Oh, my guy Sam. What's up, Sam? What's going on? You and your camera. I love it. I have a Canon 90D right here that I commandeered years ago. My wife bought it and she was going to use it, and I needed something to stream with, and I put it right here. It's just been here ever since, and you know, someday, maybe Sam, email me, Russ at DapperDividends.com if you want to. But do you know any good live streaming cameras? Because maybe this is too much, but I have a 90D right here that I use to record and live stream. So, I got to figure something else out, because I'm looking at you, Sam, in the camera right here, and I kind of hate it. I have my monitor right next to it, so right there I'm reading the comments, and that's what you see. My eyes dart off to the side, right? I don't know how some people do it, where they have it where I swear to God, they're looking directly into the camera and they're reading the comments and everything. So even if it's down here, I'm still looking down or up. I don't know. Someday I'll figure it out. But what I have figured out is no commercials for you guys. So if you're watching that, or I don't know, who's going to stick around watching this for an hour and a half on the replay, God bless you if you did. Put it in the comments below. I would love to know if anybody stuck around to the end for that. But yeah, all of you. Dude, we made it an hour and a half. You asked, I delivered. Dude, Frank, thank you. I'm going to write that down, buddy. I'm going to write down Meet Kevin setup, because I don't want to forget. I'm pushing 50. As my wife said, I can push it. That's what you get when you marry a redhead, people. You know, I push and she pushes back harder. Yeah, Shannon, thanks, man. We don't know it all, but I'm learning every week to be better, self-educating, experiencing things, sharing what I'm learning, what I'm doing, and this was a long one, so I really hope you guys enjoyed it. Put in the comments if you did. I'll let Kevin Burgess. I'm gonna remember to turn on the ads now. I'm going to see how quickly I can do that. Turn on the ads so I can make my $2.27 or whatever. But guys, I'm just really thankful that you all just came in, hung out, watched the show. I just really do appreciate it. I have a lot of fun doing this. It doesn't pay the bills, believe me. It might put gas in the car for a week and a half, 2 weeks, like this YouTube stuff. So it's truly a labor of love, and I just enjoy doing it. And hey, thank you. That's all I'll say. Thank you. I'll be back, I think, next week. I think we might be going to the Peoria, Illinois Irish Fest, but it's a school night, so we should always be back now. For the whole school year, we should always be back because the kids got to get in bed, right? And I do thank you for watching to the end of this, whatever this kind of brand of humor and investing analysis stuff I do. So thank you for watching. And my guy, rest in peace, Paul Rubens, a.k.a. Pee Wee Herman's taking me out. I'll see you guys next week. Thank you.